Welcome back to Fast Market. I'm Diane King Hall in for Tom White alongside my co-host for the hour, Kevin Green. Time now for our cash tag segment. Joining us now, we've got Landon Swan, co-founder LikeFolio. We're going to break down Airbnb. Landon, I know you have some insight on this one. Shares are down, though, of 5% over the past year. Let's talk about your outlook for Airbnb in 2025.
Sure. Yeah. I mean, this stock has been pretty flat. I mean, for the last little bit, and the last three earnings reports, if you look, they've all sold off. So, I think the last one had a little bit of a run up into it that obviously wasn't justified. Sold off on that. Now, they did boost revenue, but they missed their earnings estimates. But when you look at how this company's performed over the last year, I mean, their earnings have gone from negative 55 cents a share to positive 41, positive 86, and then the last one was over $2. So they're on the right track, but still their PE ratio is really high. I think it's 44 right now. So despite that growth in earnings, I think people are really pricing in a lot of growth, and so that's always tough to live up to. One of the things that we've seen is just in general, a lot of the travel and hotel demand numbers have been somewhat down overall in the industry. Airbnb has actually been flat, which, given the competition, if you compare them to the competition, it's actually kind of a positive thing. They're not keeping up with Hyatt, but when you look at their, we're looking at the app numbers now. Flat year over year, obviously not what you want to see, but I think it's kind of a symptom of a larger problem in that a lot of the travel industry, the hotels, are experiencing a little bit of a pullback in interest out there, and so they are flat on app usage, monthly active users. They're flat on web demand. We're seeing a decrease in consumer happiness and just general chatter on social media. Here you can see how they stack up against the competition. Hyatt doing well, everybody else falling behind. Airbnb holding the line, but not what you want to see as an investor. Obviously, you want to see growth. And so being flat in a kind of an industry where you've got a bit of a headwind, I guess, can be seen as a positive. But overall, we're seeing a slowdown in growth for Airbnb, and the consumer happiness is a bit concerning. I mean, they've always had some trouble in that area. I mean, there's so many memes out there about how, a hotel costs $250 and an Airbnb says it costs $120, but by the time you pay the cleaning fees and all the other fees, you're paying $400. So, I mean, those are, yes, it's right. It's easy to come by those kind of things. And they've got a couple of bad ones out there right now. I mean, they're being sued for discrimination, but for discriminating against a mother and her three children. They've got a really bad one about someone unable to cancel their Airbnb inside the Palisades fire zone. The house isn't on fire, but it's close enough that they should definitely be able to cancel, but they're saying, no, you can't. That doesn't fall within our major disruptive events policy. So they got some bad press. Overall, I think that it's just, it's continuing to be a play for the younger demographic. I mean, when you look at who's using it, the 25 to 34-year-old group makes up over a third of their users, whereas the 55-plus age group is only 12% of their users. So it's a younger demographic. I think the older people with a little bit more money are saying, you know what, I'd rather just stay in a hotel and keep it simple. And the novelty, I think, a lot of the time has worn off for Airbnb. A lot of times people realize, you know what, hotels are just a lot more convenient. So it's tough for me as an investor. I'm staying away from it. I don't love this company, and the data isn't really exciting. We need to see a turnaround where people are really talking about using this, really talking about loving Airbnb, and that's just not what we're seeing right now.
Landon, do you think that this is more about competition kind of getting better, right? A lot of those hotel operators, 3 years ago, 4 years ago, especially during COVID, weren't doing that great. They weren't really addressing the market, but it seems like they're kind of changing their brand. You also have Verbro kind of hitting the market. Or is this more self-inflicted when it comes to Airbnb? Because I've heard the same horror stories like everybody else, but it still seems like it's like the noun or the verb to use when you're traveling, right, and not staying at a hotel. So do you think it's more competition getting into the space, eating into their market share, or just more self-inflicted lack of fundamentals and execution on their part?
I think it's somewhat self-inflicted, and it's difficult because I think investors fall in love with this asset light model. And it's great on paper, but there are downsides to it. And part of that downside is the inability to control experience. I mean, there is, Hyatt and Marriott, all these big hotel chains, they can control everyone's experience from top to bottom at every one of their locations. Airbnb cannot do that because they don't own the asset, and it's just a bunch of users, a bunch of homeowners who are renting out their homes. And so they can, over time, try to do a good job of weeding out the bad homes and the bad listings and highlighting the good ones, which they've actually made a concerted effort to do that. But it is somewhat inflicted because of the nature of the beast. I'm not saying it's execution. I'm saying it's business plan. It's the type of business that they have that they just can't control for all the bad experiences. Over time, they can weed them out, but they continually need more people to sign up. And so that's a constant process. So there's always going to be a group of bad apples, whereas generally speaking, if you go to a major hotel, you're probably going to get about the same experience as you did the last time you booked at that hotel. And I think that really resonates with people. So the up and down nature of the consumer outcome, I think, is tough for the repeat business. Some people understand it, and that's why I think the younger demographic, it hits on it a little bit more. But it's tough to be consistent with consumer experience.
It does seem like that's the case, and it seems like they really had their moment during the pandemic, but you started to see, that cost-benefit analysis being weighed, especially because of the inconsistency. I mean, I've stayed at Airbnbs, and I used to love it, but until I didn't anymore because there was just inconsistency. So I'm one of those older people, if you will, who went back to hotels. But the other thing I feel like that is a challenge for Airbnb is state-by-state regulations, because you have different regulatory environments that they're dealing with, because they can't just operate everywhere. So yes, the hotel industry will have to face some regulations, but there's gonna kind of be a consistent standard. Airbnb is if you're renting an apartment in New York, they're running up against certain regulations there. Is that one of the headwinds that you have to think about when you're considering making a play in terms of shares of Airbnb?
Yeah, and I think that just goes along with their model, right? I mean, that's just part of it. Hotels generally operate under the same rules nationwide. Generally speaking, there's going to be different taxes, things like that, but it's not a big difference. Whereas this is a new category that they basically invented, and because of this model that they're using, again, lots of pros to this model, but the cons are real, and I think a lot of it is regulatory. There's a lot of uncertainty. I mean, there could be municipalities that just flip their law from one day to the next, one year to the next, and Airbnb's got to be on top of that. And it's not going to be a law that affects a hotel. It's going to be a law of a private person renting out their home. So they're doing what they can. I mean, they've got this Icons experience, which is nice. It kind of highlights all these really cool things that most of the time hotels cannot compete with. These are like world-class homes or experiences, which is nice, but that's less than 1% of users. The bulk of the business is in just the normal, I'm renting someone's home or room, and for the most part, that's a very difficult experience to control. But again, kudos to them. Their earnings per share have been rising every quarter for the last year, even though the last 3 earnings reports created a sell-off. So I think as investors, you got to be careful with this one, and just know what you're getting into. Know the uncertainty. Know that the asset light model has its pros, but it's got plenty of cons as well.
Yeah, I do think that Icons piece is very interesting, and you have those unique experiences and those different things like the Barbie house or Malibu house, whatever that was called. So those are neat. And then there are certain markets where it does work better in, like say a Martha's Vineyard, but they also compete against Verbal in a market like that. Landon Swan, co-founder LikeFolio, thanks a ton for that deep dive into Airbnb. Appreciate you. All right, Kevin, when you think about this data that LikeFolio